And let's get straight to the market action with iCapital Chief Investment Strategist Anastasia Amoroso and Bespoke Investment Group co-founder Paul Hickey. Welcome to you both. Another down day for the markets. Anastasia, I'm going to start with you. We've had poor breath. We've got what's expected to be I'll say, a hawkish Fed pivot, or at least a slowing pace of easing with the FOMC rate decision tomorrow. You've got sentiment and positioning that's particularly frothy, and then risks factoring into the market around what Trump 2.0 is going to mean here for stocks. Yeah. How do you see 2025?
Well, 2025 is definitely a positive story, and I can talk about that in just a minute. But you mentioned some of the key indicators, Morgan, which is some of the sentiment and positioning. It has gotten very buoyant. It has gotten very boomy and frothy, if you will. And so I do think naturally the market is poised for some sort of a consolidation, or at least a pause in the rally that we have been seeing. I mean, if you looked at some of the overbought conditions on some of the semiconductor stocks that have rallied recently, I think we need to take a little bit of a step back and work that off. And I think that's what the market is doing. So I think we might still, gain ground into year end. But going into the 2025, I do see a positive outlook. I think the underpinnings of the economy are absolutely solid. We saw that in retail sales. We see that in real wages from the consumer. We see that in the household net worth. And so all of those factors together with rate relief, deregulation, capital market activity, all of that should support 2025. Now, I do worry, having said all that the sentiment is universally bullish, it seems like, and everybody's conviction is that it's going to be a solid year. So I do start to wonder what might be the wild cards, what might go wrong, what might we be disappointed about come January.
Okay, I want to dig into that a little bit more. But first, Paul, I want to get your thoughts on this market here. We just opened up the hour talking about the fact that the Dow is on pace for its worst losing streak, at least based on number of days, since 1978, even as we are seeing certain pockets or corners of the market looking very, very frothy. I know Bespoke has been putting out notes on things like quantum computing and some of the crazy moves we've seen in stocks there. What does it tell you about the health of stocks right now?
Yeah, so I think when you look at the individual stock level, it's been a weak start to the month of December. But let's remember that December is always, or not always, tends to be back-end loaded. Historically, mid-month, it's unchanged on the month, tends to be. So this underlying weakness is more than expected. The average stock is down 4% in the S&P 500 this month, even as the index is flat to slightly higher. So I think there's quite a disparity depending on which way you look at things, how the market looks. So I think in that respect, it's a little bit concerning. But I do think that we're going to close out the year on a stronger note here. If you just look historically, the seasonal trends are in the market's favor. The last 10 trading days of the year tend to be strong, especially in years when the market is already up 20%. You look at the NASDAQ, 17 years it's been up 20% heading into the end of the year. 17 years it's been higher in those last 10 trading days. So that's a pretty consistent record. And then I think going ahead to the Fed tomorrow, while Anastasia mentioned sentiment being universally bullish or very bullish, I agree with her completely there that there is a lot of optimism on the part of investors, but there's also near unanimity that tomorrow is going to be a hawkish Fed statement, and that we're going to see hawkish comments from Powell and, dialing back of rate cuts. And so when everybody's expecting that, it tends to be priced in. So that could be a positive surprise as we get into the statement tomorrow.